Let's talk about the elephant in the room, and I'm not talking about gas prices. We're talking about whether or not it makes sense when rates have doubled from where they were last year to buy a home in this market where most home values have not dropped appreciably enough to make it make sense. We put together a rent versus own comparison for a client in Texas that you need to see. Our client was spending $1,500 a month in rent. That translates on a 3% increase over 5 years to $97,000 in rent paid. Now, if you compare that to the tax savings they're going to get in a 12% tax bracket over the next 5 years, that's a savings of almost $9,400 off of their taxes. So when you look at their payment on rent is $1,530 a month if you extrapolate that out over the 5 years, where their net payment, meaning the amount of the payment plus the tax savings being reduced off of that, is $1,368. So they're actually saving more by buying a house at today's interest rates, which they locked in at 6.5%. So on an FHA loan with a 30-year fixed rate, all their taxes, all their stuff included, yeah, the payment was total higher than $1,530, but the net payment, which is their savings after all of that's said and done, is really only $1,368. And our plan is, in the next couple of years, as rates come back down again, we'll come back, refinance that if the rates make sense, and we'll save them even more. The total cash to close was only $13,800. So they're able to get into this house for very little money. So let's compare the payments over the next 5 years. $97,000 in interest, we went over that, but $103,000 is what you're paying for the total house over that period of time. However, $11,900 of that is going right back to principal, so that's your money. Then another $9,400 of that is wrapped up into your tax benefit. So the total advantage for you is still a savings between $97,000 and $82,000. So you've got a savings of about $15,000 over that 5-year period. Now the value of the home should also grow over the next 5 years. That translates to total increase in equity at a 3% increase to $45,000 of additional gain by buying a house. So where's the catch? The catch is the payment went up by $300 a month. So at $300 a month, if money is tight for you every month and it's difficult to pay your bills, now's not the right time to buy. But in her case, $300 a month was not a big deal. That was able to be covered, and then you extrapolate that forward and you look at the tax savings and the benefit of that increase in the equity over time. That's an advantage. So if you know somebody who's thinking about buying, save this video or forward it to them.